Michael Burry is well known to moviegoers and investors. Hedge fund manager and investor Michael Burry is American. He achieved significant profits betting against the real estate market during the 2008 financial crisis. The movie The Big Short, based on Michael Lewis's book, told this story. Tesla bear Burry has predicted a drop in Tesla stock since 2020. Tesla has been hit by falling electric vehicle share prices, supporting Burry's expectations. Burry forecasts another 70% Tesla stock price drop. How does Burry justify his claims? Will Tesla stock fall? What do other analysts and experts say? Find out. Dr. Michael Burry is an American doctor, computer scientist, value investor, and hedge fund manager. He founded Scion Capital LLC, a hedge fund that made billions for customers when the American housing market collapsed in 2008. In 2001, Burry launched Scion Capital LLC, which returned 55% in its first year. Burry's smart investment strategy with Scion earned him $600 million in assets under management by 2004, making him an eye-catching investor. In 2020, Michael Burry publicly bet against Tesla, calling its stock a bubble about to explode. He later accused Elon Musk of selling company shares because he thinks they're costly, not to pay taxes or appease regulators. We'll revisit this. The Tesla stock price fell more than 35% to $800.77 on February 25, 2022, shocking investors. The Ukraine crisis and Russia sanctions are likely behind this drop. A dark cloud hangs over high-tech enterprises and the electric vehicle industry. Several Tesla-specific issues may be causing market turmoil. Its CEO is fighting the SEC on a 2018 deal. Successful the firm's bearish put options were because they were never disclosed. Last month, Burry told CNBC that he had ended his Tesla bet and that it was a trade. Does this suggest he no longer expects Tesla stock to fall? Burry stated in a recent interview that stock market speculation has reached a crucial level not seen since 1929, and that assets are more expensive than when the dot-com bubble burst. He worries the current geopolitical and economic instability may eclipse the 1970s. He seems to worry that the Securities and Exchange Commission and Federal Reserve are doing little to prevent economic disaster. Burry sells shares. Besides stalking and criticizing Tesla CEO Elon Musk on Twitter, he decreased his common stock holdings from $137 million to $42 million in Q3 2021. Tesla isn't doing well lately. Its German factory is still under construction. The opening date has been postponed many times. Tesla's European development and expansion depend on the factory. Their electric pickup vehicle will not be produced until at least the first quarter of 2023. The late 2022 date has been pushed back. What do other experts say? Tesla Incorporated may be the most popular Wall Street business with more expected outcomes. A small group of investment banks thinks the electric vehicle giant will reach $1,400 next year in editorial. J.P. Morgan analyst Ryan Brinkman, on the other hand, anticipates a decrease in Tesla shares to $325, despite recently upping his firm's price goal on the company. He wrote recently that the price reflected advantages like a unique business model, appealing product selection, and cutting-edge technology. He added that its products are daring, distinctive, elegant, and thrilling to drive. A functionally strong management team and imaginative leadership drive the organization. However, Brinkman revealed difficulties that affect his company valuation. Late expansion into higher volume. Lower-priced markets increases demand execution and competition risk. The business has a history of over-promising and under-delivering, so even though technological and execution risk are lower than expected, this is compelling. This doesn't mean Tesla and Musk haven't invented innovative electric cars and solutions. To stress that product launching dates rarely become reality. Cybertruck rollout will be delayed by at least 2 years. Tesla is the first vehicle maker in over 50 years to build itself from scratch for mass production, but it still has a long way to go. Other experts suggest investors shouldn't worry and that current circumstances may favor growth stocks. Tesla stock may survive a crash, according to some analysts. While rising interest rates may worry investors, Tesla shares are well positioned to weather the storm. According to Investor Place analyst Luke Longo, growth stocks may climb in 2022 despite popular assumption. Clearly, his theory applies to Tesla. He gives the example of the Federal Reserve's first consecutive rate rise cycle in December 2016. 8 times in 2 years, the Fed hiked interest rates. This period saw growth stocks surge. Cathie Wood's ARK Innovation Exchange Traded Fund, which represents the market's fastest-growing companies, had surged 90% since its launch. Growth stocks underperformed in 2021 ahead of what most expect to be a new rate hike cycle in 2022. However, history implies that growth stocks will recover and rise significantly once the rate hike cycle begins. Even though everyone thinks growth stocks would suffer in 2022 owing to a rate hike cycle, buying them now may be the smartest move. History suggests 2022 will be a significant year. Thus, we disagree with Burry. After a low point, we expect the stock to rise and increase faster. What do you think about Burry's predictions? Tesla stock price decline or rise? Comment below.